Welcome to MarketSnap's daily market rundown. The AI trade just got its first real stress test, and the market is asking a question it hasn't had to answer in months. What happens when the hype machine stalls? Today we saw a dramatic rotation that tells us more about where this cycle is heading than any single earnings report. It was a day of two distinct stories. The Dow Jones Industrial Average managed to eke out a gain, climbing about 0.35%, while the tech-heavy Nasdaq Composite struggled, closing down 0.43%. The S&P 500 was essentially flat, dipping just 0.1%. The real story wasn't the headline numbers, but the massive churn happening underneath the surface. The VIX, the market's fear gauge, actually fell over 4% to 18.63, suggesting that while there's sector-specific panic, the broader market isn't pricing in a systemic crisis. The S&P 500's flat performance masks a brutal two-day sell-off in the very stocks that have been carrying this market. We're seeing a classic rotation out of high-flying momentum names and into areas that have been left for dead. The bulls are arguing that profit margins are at all-time highs and earnings growth is broadening out beyond just the Mag 7. The bears, however, are pointing to unprecedented market concentration and record margin debt as a ticking time bomb. The pain was concentrated in the semiconductor and AI ecosystem. Oracle dropped over 4.5% and Blackstone fell nearly 6%. But the real carnage was in the chip space, where names like Seagate Technology slid over 4%. This wasn't a broad market crash, it was a targeted takedown of the stocks that have led this bull market. Meanwhile, the money flowing out of tech had to go somewhere. Home Depot surged over 5.6% and Thermo Fisher Scientific gained nearly 5%. Booking Holdings jumped over 7% and Uber Technologies rallied 6% after announcing new retail partnerships. This is the textbook definition of a rotation. Investors are moving from story stocks to value and quality names. The trigger for this rotation appears to be a combination of factors. The South Korean market experienced a 10% crash this week, which analysts are attributing to a massive margin call on leveraged positions in memory chip makers like Samsung and SK Hynix. That shockwave rippled across the global semiconductor complex. On top of that, there's growing anxiety about the sheer amount of debt the hyperscalers are taking on to fund the AI build-out. The market is starting to ask if the return on that capital will justify the spending. All eyes are on Micron Technology, which reports earnings after the bell. The stock has been incredibly volatile, and its report is seen as a major litmus test for the entire AI trade. The whisper numbers are high, and any sign of weakness could trigger another leg down. Also in focus, NVIDIA's CEO Jensen Huang made headlines by calling black market data centers made from smuggled chips a dead end, reinforcing the company's alignment with U.S. national security interests. On the macro front, the Federal Reserve released its annual stress test results, showing that all 32 major banks could withstand a combined $708 billion in losses. This is a strong signal of stability in the financial system, even as the broader economy faces headwinds. Meanwhile, Treasury Secretary Bessent is talking up a return to 3% GDP growth, and there's chatter that the White House may be giving the new Fed chair, Kevin Warsh, a green light to hike rates if inflation doesn't cool. That's a major risk for the debt-fueled AI trade. Looking at the weekly performance, the rotation is even clearer. SpaceX has been the worst-performing large cap over the past week, dropping over 17%. Palantir is down over 10% in the same period, and Oracle has shed nearly 10%. These are the names that were priced for perfection, and the market is now demanding a discount. On the flip side, the weekly winners read like a defensive playbook. Novo Nordisk is up over 9%, AbbVie has gained 6%, and IBM is up over 5%. Dollar General and Dollar Tree are also on the list, suggesting investors are seeking safety in consumer staples and healthcare. This is perfectly reflected in the sector performance. Consumer defensive and real estate were the top-performing sectors today, while technology and consumer cyclical lagged. The market is clearly in a risk-off posture, favoring stability over growth. The earnings calendar is packed. Beyond Micron, we have FedEx, which reported a beat but saw its stock dip on forward guidance. Carnival and Paychex are also reporting this week. These reports will give us a crucial read on the health of the consumer and the broader economy, which is exactly what the market needs to decide if this rotation has legs. You can find exclusive earnings transcript summaries on MarketSnap. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Remember, days like today are exactly why we focus on long-term strategy over short-term noise. The rotation we're seeing is healthy, even if it's painful. Stay engaged with MarketSnap for our daily summaries and in-depth SWOT analyses to help you navigate these shifting currents. We'll see you tomorrow.